What is up, YouTube? Welcome to Major Trades. This is episode 3 of Market Monsters, the series where we dissect some of the greatest stock market winners and cover the clues they left behind before their massive moves. Today, the stock we will be analyzing is FSLY Incorporated, ticker symbol FSLY, and more specifically, the run it went on in May of 2020, where it delivered a monster 250% move in just 44 trading days. This means a mere $1,000 investment could have become $3,500, or $10,000 would have become $35,000. So without further ado, let's go ahead and hop right in and see what clues this stock left behind. But as always, before we get into the technicals, I'll give you a quick rundown of the business, what they do, and what drew interest into the stock. FSLY is an edge cloud and content delivery company that helps websites, applications, and streaming platforms deliver content faster and more efficiently. In simpler terms, if the internet were a highway system, FSLY builds out shortcuts. Their technology helps websites load faster, stream video more smoothly, and handle spikes in traffic. The company generates revenue primarily through usage-based fees, meaning the more internet traffic that flows through its network, the more money it makes. In 2020, when this stock went on its massive move, obviously the pandemic and lockdowns caused an explosion in streaming, e-commerce, and online activity, creating a perfect environment for FSLY's business model. Revenue growth accelerated. Q1 revenue grew by 38% year over year, and Q2 grew by 62% year over year. So not only is the growth extremely impressive, but the actual rate of change is also expanding. That combination of strong growth and explosive business momentum helped fuel the massive 250% run we're about to get into. So with that behind us, we'll go ahead and hop into the technicals. So FSLY, as you can see here, I have the chart pulled up from 2020. And for reference, this here is actually the COVID sell-off and pandemic. And so I wanted to first get into the technicals, and first thing with that is going to be relative strength. And so as you can see, on May, this day here, which is March 24th, the stock is already coming off of its lows as the market is bottoming. So on May 23rd is when the S&P 500 hits its bottom, and this stock is already coming off of the lows, signaling that it has relative strength when compared to the market. So that is the first thing. The second thing is this stock is already moving forward, and as the stock beats earnings here on May 6th, the stock gaps up over 27% into all-time highs, signaling that the stock is ready to move higher. As you can see here, the highest volume the stock has ever traded is on this day on the on the earnings play here, and it traded over 5 times the average daily volume. And like I said, the market is already coming off of lows, so we have that as a tailwind to push the stock even higher. And during this earnings, it had an EPS beat as well as a revenue beat of 38% year over year, and the guidance was strong for the year. So like I said, strong earnings, the stock is coming off of the COVID lows and it's leading out of the lows. And this stock gaps up into all-time high and allows us to get a nice tight entry on this thing with a stop below the day, low of day. And the stock continues to push through all-time high on strong volume and eventually actually sets up for a second play here. So after you enter the stock, again, we're immediately in the money, which is great. We're able to finance some of that risk off. You can move your stop up to break even at that point. And then as the stock continues to set up, it actually gives us another setup and another buy point. So as the stock tightens up and coils up through this level here, we can add additional funds into the trade itself, as giving us more potential to have larger winners and smaller losses. And so this stock, although I don't use moving averages a lot, this one was the 10 moving average was actually a great way to signal when the stock run was over. And so this one respects the 10 moving average all the way through here, eventually ends up breaking. And what we have here, and I can go into depth on another video, and I might do that on a trader's playbook video, but what you have here is essentially a stage 3 topping pattern. So the stock starts to get extremely volatile. As you can see, volume is drastically increased, showing that there's clear signs of distribution. So you have a stage 1 base, a stage 2 breakout, and then a stage 3 topping pattern or distribution, signaling that it's time to get out of the stock. And from the original gap up to the run itself, I can show you the move, which was roughly 250%. And obviously from there, depending on how you traded it, you could have gotten different returns. So 180 to that level, 250, and the high was actually over 300, almost 400%. So the key things that it should be taken away from this stock and what it was doing prior to its run was relative strength. So like I mentioned, the stock is coming out of its lows from the COVID prior to the actual market bottoming. So it's letting you know, hey, the stock is already being accumulated by someone or some group of individuals that see something that the market does not. And the stock begins to move forward, and the earnings gap is actually what is the entry trigger on this one. So the stock gaps up on earnings, and it is a large gap, so over 27% on the gap there on strong earnings, and it's in a hot sector. It is a leader of the group, and this stock shows that it has a backing in that gap up, in the sense that there's strong volume. In this case, it's 5 times the average daily volume on this one, which was the highest volume that the stock has ever traded. This one happens to actually be a recent IPO as well. The stock gaps into all-time highs, so now that we know that there are no more sellers overhead and supply, there's not going to be that overhead supply, which is exactly what we look for in a lot of these plays. And the stock immediately goes in our favor and actually tightens up for another second entry there, giving us the ability to add on more shares into the trade. And then the stock finally starts to begin showing signs of distribution and a stage 3 topping batter, signaling that it's time to move on. So that is all for episode 3 of Market Monsters. If you enjoyed this video, you will like the other stocks we have broken down in this series, which should pop up on your screen now. As always, if you found value in today's video, please leave a like, comment, and subscribe if you haven't already. Thank you for watching. Major Trades signing off. Peace.